Hello everyone, welcome to the show. Here we are. Well, it's about a minute too early, I suppose, but we're here, so we might as well start. We might as well get going, and we might as well get on with the day. Comment of the week. Warren Buffett has inside information. That's comment of the week. I love that comment. That's great. But yeah, maybe not. But when it comes to investing, you just invest. So yeah, let's get on with it. Let's talk about the markets. Don't forget, the markets are risky, so that's something you have to live with. Okay, so earlier on, I did say that we're going short on the Nikkei again. And there it is. Looks like it's happening. So let's see what happens. But it looks like it might come down and take some money down here at the 39. But let's have a look at that. Kevin's just making his sandwich. No rush, bud. No rush. I'm not going to start with anything serious for the first few minutes. We'll wait till everybody's on board, and then we'll start talking about some serious stuff. For now, I'm just sitting here listening to all the holiday aeroplanes outside going around and holiday helicopters and whatnot. You know, that's the advantage of living by the coast, or shall I call it the disadvantage? I don't know. You know, at this time of the year, it's difficult for me to even get into my favorite restaurants because they're all packed solid, they're all full, everybody's on holiday here, and that's what happens when you live in a sort of holiday type town. Everybody comes down on their holidays and they kind of take your town over, and I really don't mind. It's lovely. I love it to bits, but yeah, it does kind of, you know, like you have these things that you do during the year. For example, if I go down to the beach, I've got this particular area that I might like to park in or whatever, and then that's full. You know, you can't park there. Or, you know, the particular restaurants that you like or pubs that you like to go to, and they're packed solid. And yeah, that's the only real downside to it. But other than that, it's great. Nothing wrong. But I actually love listening to the aeroplanes going over, you know, the war, you know, stuff like that, and going flying around in the sea and all that type of stuff, probably showing people around and what have you. I think you can pay for those trips. Good afternoon from Birmingham. How's it? Welcome. Hello, Roy. Hello, Kevin. Hello, David. You're all here. G'day from Greg. Greg from Brisbane. How's it, Greg? Welcome, man. See you up late again. Always up late there. Oh, no, that's hectic. Sure. I'll tell you what. I want to see what's in the news. What's in the news? Why top Wall Street bull thinks S&P 500 rally will cool. Yeah, everybody's got their point of view. Everybody has their point of view. Everyone thinks that things will do this, that, or the other based on, I don't know what actually. Meta donates $1 million to Trump's inaugural fund, bank overdraft fees. Nothing serious. Stocks slip as ECB Fed interest rate cuts priced. Yeah. China vows to issue more debt. Interesting new stuff. Yeah, okay. Struggling with my mouse today. I actually changed the mouse, and now I'm still struggling with it. Struggling with a different one. I don't know. Maybe it's the computer. Anyway. Hello, Rob from KSA. How's it, Mohammed? Welcome. Good to see you. Good to have you on board. Yeah, as I always say, the market will always lull you into a false sense of security. So, this week, I've taken 2 losses already. The Nikkei and the US dollar Japanese yen both whacked me. Little buggers. But that's because I played on the same continent, I suppose, with the Forex and with the index. So, you know, it was bound to go the same way, which is one of those things. But I see the South African rand is suddenly strengthening again. It's all happy. And, well, US dollar ZAR is short. So the South African rand is strengthening. It's getting stronger again. So the world seems to be happy with South Africa at the moment. That's doing quite well. And that SA top 40 has gone all the way to the top. But, you know, when they talk about the markets and what's going to happen with them, and we all know that every December there's a good possibility of what we call the Santa rally, the December rally, the Christmas rally, whatever you want to call it. this time of the year, you tend to get this momentum to the upside. And it's actually a strange thing because the bigger institutions close their doors and they go on holiday. And this is all caused by very low volume and retail traders and that sort of thing. It's very much next week. So it doesn't always happen, though. There is a percentage of times when this lulls you into a false sense of security because it's happened so many times before, and then it lets go and it takes people's money. So that's why many of the bigger institutions, the bigger brokerages and whatnot, what they tend to sell their positions out before they go on holiday. That's like us on the weekend, so they don't come back after the holidays and into a disaster. How's it, Luno? Welcome. I'm short on the Japan 2252, so fingers crossed. Yeah, absolutely. That's what I said. It is going short though, so there's no real problem with that. I think I forgot to take the short on the funded trader markets though. I did. Oh, okay. Doesn't matter. I might still take it. I'll have a look, see what it does. Okay. How's it, Wendy? Happy to catch the live early. Well, yeah, it's nice to catch us early. Welcome in 2034 for World Cup. Yeah, that is it 234 or 235? Not sure. Okay. But I know it's around that time. The World Cup is going to Saudi. Okay, Kevin. I'm short in the Japanese. Blado, Kevin, greetings, Mohammed. I have a question about why you don't use moving average indicators. Howdy, Kev. Maybe when Trump gets inaugurated instead of Christmas. You know, when usually in January you get this sort of downside. And yeah, this time it might just work the other way around because like you say, when Trump gets inaugurated, there might be some happiness or whatever with the people and they might just get excited and and push the markets up. So it's going to be interesting to see what happens in January with the markets. Mohammed's got a question as to why I don't use moving average indicators. It's not that I don't know how to use them or anything like that. I can use them, but I don't use them because they're lagging indicators. You must understand, and I will do a video on why is this thing going slow? I will do a video on indicators and lagging indicators and moving averages and that sort of thing, because it is actually quite a big issue when we have lagging indicators causing a problem. Why is my mouse doing this now? You know what, guys? I might have to get another mouse out just now if this carries on doing this. This is not good. This is actually going to be a very big problem for us. Yeah, you see, this mouse is going to give me a headache. A very big headache. I can see that coming. This is no fun. Okay, no problem. I do have another mouse on standby, just in case that one fails. Excuse me a second, guys, while I sort the animals out so that we can actually work, because this is obviously going to be a problem. Give me a second. One or two slight technical issues there. Let's see if that works a little bit better. There you go. Now we've got something that moves and something that works. Sorry about that, guys. But these things happen sometimes. Lesson learned. Don't use wireless mouse on this scenario. Big lesson learned there, eh? That was quite bad. the thing just stopped moving on me. That's like incredible. Okay. Yeah, Kev, you know, that's funny. When you get older, it's amazing how your joints start to seize up, eh? All your joints. I mean, I tripped over a hole a few months back and I almost put my hip out. That's horrific. Yeah. Okay, so anyway, yeah, Mohammed, I did answer your question, but let me answer it in a little bit more detail. I am going to do a video for you guys on the moving average crossover. I have done one for you guys, which is coming out tomorrow on Fibonacci, by the way. Okay, I've created a Fibonacci video for you guys, which will be launched tomorrow, just getting its finer details and finer touches, because those videos are edited properly. And then after that, I'm going to put something together for you on moving average crossover. Moving average crossover works very similar to the moving average convergence divergence indicator. Very similar. But moving average crossover, you can use it on a, what did I used to use it on? 9 and a 20 day. I do use it for investments sometimes with the 50 and the 200 day moving average. So the 15-day moving average crosses the 200 moving average up. We call it the golden cross, which means you can buy that stock and look away. And if it comes down and crosses back through the 200-day moving average, we call it the death cross, which means it's sell and go away. So, you know, you can use moving averages, but you have to understand in trading, you have to be quick and you have to be fast. You have to be on it. And the trouble with a moving average is it normally lets you know too late when to get into a trade. So what actually happens is you get in too late and you get out too late and you only get the little bit in the middle. So it doesn't really work for me. And also, I don't like too much stuff on my chart. I don't like too many things on my chart. You won't find the volume and the stochastics and all those sorts of different things on my charts. I leave them off. I leave them off because they just get in my way and they narrow my vision and they counteract what you're thinking as well. So, you know, the only one that I might use on a chart that I might put there for interest's sake is volume, because volume will tell you whether, you know, if a price is moving fast in a direction and it's very low volume, then you know it's not a really good trade. Whereas if there's a lot of volume and even if the price is not moving, then you know something's happening. So, you know, you can use volume for that. It is interesting. Sometimes I might consider an RSI, because an RSI, you can look at the divergences and things like that, but you don't want to overcomplicate it. You don't want to confuse yourself. Sometime in the near future, I'll do a convergence video for you as well, so that you can understand how to trade that. The thing is, I know how to trade all the systems and all the different types of systems, and believe me, I've tried them all as well. I've even used the Ichimoku, I can't even pronounce it properly, but I've even used that system, and I found it also to be very lagging. It's such a lagging indicator. It does work. Everything works. Like I've told you guys, everything in the market works, and the squiggly lines are just your high probability trade. That's all it is. You're looking at the lines and you're thinking, if I take this trade, do I think it's going to go in that direction? But as you guys all know, over and over and over again, that's not what makes you the money in the market. What makes you the money in the market is our strategy, the way we strategize, the way we manage our risk, and the way we keep the trades the same all the time. Which brings me to the point, I did have someone ask me about the difference between a $5,000 and $100,000 account and the 1% and the stop loss. So we're going to go into a little bit of detail on that today as well. And Rob, I went short on the euro Japanese yen several days ago, as I shared with you on the last live. Is it possible to give a swing forecast for the foreseeable future on the euro Japanese yen? Well, let's quickly do that before I go into the other stuff. And on the euro Japanese yen, what I'm seeing here, very similar to the US dollar Japanese yen. I actually got stopped out on that yesterday because I was short. But I'm seeing a very, very similar picture. Let me just take all this rubbish off of here. This is like so many drawings on this thing. And let's just do it properly. Let's just go and get ourselves a few levels here so that we can see what we're looking at. and we'll give you a proper bit of research there. So there's our support. There's clearly our support. That's an area of interest. So let's just draw our gigantic, massive, oh my, that didn't work, did it? Shall we try that again? Okay. This mouse is not much better than the other one, but at least it's working. Okay, so there's our support. And right, so I'll be off to the shops tomorrow to go and get another mouse. Okay. Now, you like to order these things online, and I don't mind doing that. And then the minute you want it, it's so cheap, and then they charge you more for the delivery than they do for the damned item. So yeah, I'd rather get in my car and just drop down to the shops. I live in the middle of town just about, so it's fine. Anyway, so now we've got ourselves a little level here. Notice anything here? We've had this run down. It's gone into a range on the daily. So we're kind of in a range here on the daily. So let's just take it back to the candle so we can see what we're doing. Let's go back to the 4 hour so we can get a better picture of what we're on about here. So there you go, Wendy. That's your... Did you say you are... You're short. Yeah, you're short. Yeah. Unfortunately, you see, I was also short on the US dollar Japanese yen and I got stopped out. Well, I stopped myself out. I didn't wait for the stop loss. I jumped out of the trade because it invalidated. Now, the reason I say it's invalidated is because it's broken structure and it's gone above that high. Remember I said to you, I think it was on Tuesday, I do remember saying as well, that watch out if it goes above this high. This is a worry. But as we stand at the moment, it is sitting on this level, and you could call that a sort of double top. So it could go short from here. So if you are still short, I would wait a minute, right? I wouldn't just simply jump into it straight away. I would perhaps just hang on just a little moment before let's just put a horizontal line on here just to give us a clear picture. You see what you've got here. So right here, you've got this line running across here. So it's hit there. So I would remain short as we stand at the moment. But if it starts closing above that line, then it's definitely broken the structure and it's going to go long. But as it stands at the moment, if you are short and you're holding short, hold for now and just see if it'll go down a bit and maybe come down to this level here and take some money and maybe get you out of the trade at either cost or in a slight profit. If not that, at least, less loss or whatever the case. So, yeah, but it does look kind of ominous that it wants to go up at the moment. That said, watch this. Nice double top. Definitely sitting on that line. Definitely looks like it wants to correct slightly, so maybe it will. On my side, you see, that's why I'm a little bit worried about it, because the US dollar Japanese yen, when I looked at this, just completely invalid. There's nothing holding it. There's nothing saying it's good. If I draw a line here, it's above the line. So it's basically coming back to retest and go on up. Now, my worry for you is if that one's going to go up, this one's probably, in all likelihood, going to also go up. So just watch out for that, because this one totally invalidated, which is why I just stop-lossed that trade. The Nikkei also, I stopped out. Yesterday, it went straight up. I stopped out around here and I let it go. Now I'm looking to get back in again because it looks like a nice short again. So I'm looking for that. Okay. Greetings from Cameroon. Hey, welcome. It's good to see you. Good to have you on board. Great to have you on board, actually. So anyway, back to the question. I had someone ask me in the comments, difference between $5,000 and $100,000 account with regards to the 1% risk. I always say to you guys, the strategy is to risk 1% of the account on every single trade. So I know what the person's getting at is if you've got a $100,000 account, you can risk $1,000. And if you've got a $5,000 account, you can only risk $50. And I do understand what you're getting at, and you're trading on micro accounts or very small account. So, the rule isn't hard and fast that you have to trade 1%. If you want to risk more, you can risk 2%. You can risk 4% if you want to. It's just that you need to keep your risk the same. So you can do a 2%er if you really need to, if you want to do $100 per trade rather than $50 per trade on, say, a $5,000 account. Just understand that if it goes wrong much quicker. And also, understand that you have to keep the trading the same on every single trade. So you can't risk 1% on one trade and 2% on the next trade. So if you decide that you're going to risk 2% per trade on every trade, then you're risking 2% per trade on every trade. And if you lose 10 trades, you lose 20% of your account. And as long as you're comfortable with that, then that's fine. You can risk it that way. How do you find your stop loss? The same way we always find our stop loss. Nothing changes whether you're trading a $5,000 account or you're trading $1 million account. You find your stop loss the same way. And if it's a 1% on the $5,000 account, basically what you got to do is you got to go up here and say, I want my stop loss on this trade at 40,250. Okay. So I'll tell you what, let me take this trade on the funded trader market. Okay. Just to show you how to do it, right? I'm just gonna, is this the correct thing? New order. Okay. So I'm going to take it on a $5,000, not a $25,000. I'm going to take it on a $5,000. Okay, so what you got to do, let's see if it's possible to do this. We've got to say that our stop loss is going to be at 40,250. Okay, so I'm going to say stop loss 40,250, right? And you want to lose a total of $50, right? So how much will that be? Okay. That most likely is going to be, looks like a whole contract. Even more, 1.5. Okay, let's leave it at $57, right? It doesn't have to be exact. Okay. So your risk would be $58, all right, if you took 1.5 contracts at that point. So now you're saying that's my stop loss at that point, okay? $50, right? Now my take profit is going to be at 38,000. So you're going to put that in, and that's your take profit. So you take profits, your profit would be $164.03, okay? So your loss percentage is 0.25, your win percentage is 0.7. So this is very much a 3-to-1 trade even, okay? So that's how you work out your stop loss. So you asked about that. You said, but how do I work out my stop loss? That's how you would work it out. So that's how I would work it on a $5,000 account. And then I would simply click sell, and that would be the account. That would be the trade. That would be the trade in. I'm risking $57 and I'm looking for $164 profit. And then that's your trade in place. Now you've taken a trade. I've actually just gone against my whole funded trader account thing here because I risked $200 on this account, but I'll fix it later. Don't worry about it. I just wanted to show you how to take a trade like that on an account like that. So, I mean, I'm not really worried about what exactly happens to the funded trader account, to be honest with you. Okay, so that's how you take that trade. So that's just an example of how to trade with any amount. So you want to risk 1%, that's how you do it. And you can only make what you risk. So if you're trading a $100,000 account, then you would risk $1,000. If you're trading a $10,000 account, you would risk $100. Now, if you wanted to risk double that and you want to risk 2%, then you risk $100. And you just work out how much $100 is off that trade, same way, and you just put it in there. So you just add another $50 to it or whatever you want to do. So I hope that person who asked that question comes onto this live show, because I did say I would explain it in the live show. I think their name was Frederick Narajian. Okay, but anyway, guy, like you need to, that's how you need to trade. You can't say because I've only got $5,000, I can't do it. It's just the same as if you've got $100,000. What you have to understand in life is some people have got $5,000, some people have got $100,000, some people have got $10 million to trade. Depends if you're Warren Buffett or you're me. There's a big difference between the two of us here. Okay, so exactly. Like I said, comment of the week, Warren Buffett has inside information. I love that comment. Look, based on that, I doubt very much that he's got inside information. He does have information on the companies that he owns, obviously, but he has to, if he owns the majority of any one company, he actually has to declare when he buys and sells anything in the way of shares within the company or moves shares around in the company. If you don't own the company and you're just trading on the open market, then he won't have that information. He'll be the same as you and me, because otherwise it would be called insider trading, and that would be quite a serious offense anywhere in the world, no matter how much money you're trading with. Okay. Wendy, learning to manage my risk. Yeah, no, fantastic. When I put a trade in, I always look at it on the chart when it's live and check if I'm happy where I put my stop and take profit. If I'm not, I'll move it. Yeah, totally, Kevin. That's it. Good morning, BC Canada time. Good morning, Eugene. Welcome. Hey, how's it? Good to see you again. Sorry, I'm drinking my coffee here. Yeah. So, okay, so now I've gone and taken this trade on a $50 stop loss. I guess I'm going to have to work this out later and add another trade or something. It's a funded trader account. Yeah, okay, I'll sort it out later. Don't worry about it. Don't be worrying. We'll sort it out. Okay, so then somebody asked me, how do you manage the trades? So that question, I'm going to try and answer it the simplest way possible, without saying I don't manage the trades, but I kind of do. But okay. So what I do when I take a trade, I do exactly what I did just now. I take the trade, okay, and then that's the trade. And then I walk away and I leave it. But the question was, do I leave it and then just let it play out no matter what? No, not really. Because exactly what happened previously, I was in this trade short, it came back, it started to do this, and I decided, no, before it hit my stop loss, I actually got out. I actually got out early. On my other account, I had $1,000 stop loss, I lost $600. Because I decided at that point, the trade is invalid, it is not going in my way, and actually it didn't go in my way. It went all the way up to 40,000, and it would have taken the $1,000 stop loss. So it saved me $400. But then it has come back, and now I'm not afraid to look at taking the trade again. Now, how do I manage the trades was asked. How do you manage the trades? Do you just leave? Yes, I just leave and go and do what I need to do, or I come and make a live video for you guys, or I make a video for you guys, or I go to the beach, or I go shopping, or I do whatever I need to do. I do not sit and look at squiggly lines all day. What the squiggly lines do for me is I look at them and I say, ooh, there's a trade. I'll take that trade, and then I'll leave it. And then during the day, I might check it on my phone, or I might come back and I might have a look later in the day and just see. And if I don't like what I'm seeing, or I do like what I'm seeing, I might modify it accordingly. I might add to the trade because it's going well, or I might say, oh, this thing's invalidated, it's gone against me, let me get out of the trade. And often I'll get taken out of trades because I'm not looking. So how do I manage the trades? No, I don't sit and look at my trades all day. If I wanted to do that, I'd trade 5-minute charts, which I'm not really in the mood to do. And as I've told you guys before, that most of my dosh comes from investments, not from the trading. The trading gives me income and it's fun and I enjoy doing it. But most of the income will come from the investment account, because that just keeps on growing and growing and growing without fail. So, okay, is Mr. Wilson here? Aha! Hello, Mr. Wilson. Welcome. Morning, just about midnight here in Tasmania. Just about to knock off work. Got a short on NAS 100. Hope it plays out. Vusi, hi Robin, everyone. How's it, Vusi? Okay, Mr. Wilson, you've got the NAS. Okay. Wow, you got a short on this. Perhaps, I know it's late and you are in Tasmania and whatnot. Perhaps you can just give us a quick insight as to why you're short on the NAS NASDAQ. It's, to be in all honesty, it's not a short I would take. But I think I can see what you're looking at. Perhaps you can just let us know what you're thinking and why you're short on that, so I can just have a look on it and just see why you're thinking along those lines on the NASDAQ. I think I've told you guys before, the Tech 100 is a very, very difficult index to trade, eh? Very, very, it moves fast, eh? Phew, it moves fast. If you're starting out, it's a tricky one to take on. I'd rather take on the US 500. It's a bit easier. But yeah, if you want, you know, a lot of guys tell you to trade the Tech 100 and NASDAQ. But yeah, I'm not seeing the short, so just let me know what you're thinking. I will see. Welcome. Yeah, totally. I'm a little bit. I'm looking at that. If I was going to trade on the NASDAQ right now, I'd go long. So yeah, just let me know why you're short there. Okay. Holidays are on their way, so don't forget, guys. The volume is going to go down now. You're going to get a lot of light trading, and the markets will move in funny ways. So just expect that, you know, with holiday season as it stands at the moment, you're going to get a lot of retail traders. And what actually happens at this time of the year is you get a lot of traders that, what I call holiday traders, guys that have taken leave from their normal run-of-the-mill jobs, and they would like to live the best life, and then they try trading out while they're on holiday, and that's this time of the year. And then a lot of that will come into play, and then January comes along, and they've got to go back to work, so they sell it all out, and they go back to work, and then the market sort of starts to drop off again. Yeah, I get it, Kevin, I understand, but you see, you know the three ways we trade, right? We trade with a trend, we trade in a range, and we counter trade. Now, when it comes to counter trading, that's the most difficult one of the three, because counter trading, you can't use the supermarket mentality to counter trade. What you've got to do is you've got to use a system of its broken structure, so now I can counter trade what was originally the trend. If we work with what I call the supermarket mentality, and many others do as well, what that means is, and it's not an insult to anyone, guys, it's just something we call it. And the reason we call it that is because when something's expensive in a supermarket, we don't buy it, we sell it, or we don't want it. And when something's cheap in a supermarket, we all rush in and buy it. But it works completely the opposite in the markets. When something's expensive in the markets, what it actually means is it's really good, and it might get more expensive. And if something's cheap in the markets, what it actually means is it's really bad, and it might get worse. So it doesn't have the same meaning in the markets as it does in a supermarket, which is why we name it the supermarket mentality. We see something that looks expensive. Now, our brains are fine-tuned into that. We look at a chart, and we look at something that's at an all-time high. In our brains, it's an all-time high. Maybe it's been there before or not, but it looks pretty expensive. And we say, how can it get more expensive than that? Oh, you'll be surprised. You'll be really surprised how much more expensive it can get. A good example of that is a recent US 500 move. When it got to 5,500, 5,700, which is ridiculous on its own, how many of you here, sitting here today, said, well, I can't get much more expensive than that? Eh? Wow, look at that. Look at where it's gone to. Or when it got to 5,000, how many of you said, wow, that's expensive? How far can it, how much more expensive is it going to get? Just think about that. And look where it went. And look where it is now. 6,078. So how many of you are sitting here now saying, well, that's expensive. Can't go much further than that. Yeah, it's the supermarket mentality. We're fine wired to that. It looks expensive. It looks like it can't go much higher. I mean, come on. How can it? But it does. It does because we're human beings. It's not squiggly lines that are making up the prices. We are. It's you and me that are making up the prices here. Bitcoin, 100,000. Everybody. This is a psychological level of note because they pushed it up to 100,000 and then the guys started selling here because you know why it's selling here? Do you know why this is ranging at 100,000? It's because all the people that bought it started taking profits there because everyone believes that 100,000 is a wall. That's its limit. And, you know, like, ooh, how can it get much more expensive than 100,000? Do I want to leave my risky money in there at 100,000 and hope that it goes higher? No, I want to sell it and take the profit because, wow, that's a price of note. That's a psychological level. But it could go to 200,000. Who knows? That's why I say that is the problem with markets. So the only way to counter trade a market is if the price breaks its structure or goes below the last low. Because then you know it's changed direction and the sellers have come in and they're taking control of the market. Once they start taking some control, then you know it's moving in that direction and you can get involved in that market and start following that market down. It's a bit like following the trend, but you're counter trending because it was trending that way and now it's going the other way and so on. Hey, Daniel, welcome. Good to see you again. Afternoon. And great to have you back on ball. Okay, Mr. Wilson, lol, quick slap in the crib room before driving home, took small profit. Okay, so you're not in there at the moment, and that's fine. Okay, I just thought I'd go through that whole process because it's important that you guys understand that just because something looks expensive doesn't make it expensive. It just means the price is at that level at that time. You've got to look at what you see. You see, now Daniel's asking me what's my take on the NAS 100, and my take on the NASDAQ is that it's long, okay? And I can't tell you guys anything other than that, than it's long. I know you would like to say, oh, it's going to come back to the 21.4, and it might, but it's long. The only time this changes to a short trade is when it breaks down out of these levels, which will be about 21,000, maybe 20,800. Breaks out of these levels, then we can start looking at something else. But until that time, we only look for long trades on this product. So if it does come back to the 21.4, it's probably a good buy. There is a gap here, nice little gap, 21.2 to 21.3. So maybe it'll fill that gap and then carry on up to the upside. My view on the NASDAQ, Tech 100 is long. End of story. That's it. That's what I'm looking at. I can't tell you guys anything else because it hasn't broken structure. It is bullish. It's not changing its stripes today by the looks of things. You need a really big change for it to change its stripes today, and we're in a kind of a lull period, so I don't expect much to change. There's nothing in the news here saying it's going to change. Stocks roaring rally could fade in late 2025 if they follow a typical historical pattern. How many times over the last 30 years have I read that headline? If they follow a typical historical pattern. Ooh, I've seen that so many times in the past. It's insane, to be quite honest with you, if it follows a historical pattern. And people try to follow historical patterns because that's what we do in the stock market. What we do is we take a squiggly line and we take a high probability trade based on what happened in the past. So everything that you do in the market is based on a historical pattern. No matter what you do, it's based on a historical pattern. And what some guys do is they base it on historical. What happened last December will happen this December. Santa Rally, for example, case in point. sell in May and go away is one of our favorite sayings. So every time May comes along, oh, sell in May and go away. There's a reason that actually happens, because there are events that take place at that time of the year which causes that to happen. Just go and have a look. There's a whole bunch of events that take place at that time of the year that will cause that to happen in any economy. Sell in May and go away. So it's not because it happened last May that it's going to happen next May. It's just that time of the year, that sort of thing that happens in the market is going to happen again. Might be something to do with the economy, something to do with moving money back and forward, whatever the case, paying bills for the last year, whatever the case. There's something that happens in the market at that time of the year which causes it to happen every single year. Now, for example, the Santa rally, what causes that is everybody goes on holiday, you end up with a low volume, all the companies are selling out, the retail traders are pushing the market, the holiday traders, etc. It's just something that happens every single year. So you start looking at historical data to see if you can push that data forward to the front. So now we start looking at big crashes in the market and we say, well, if we measure that every 10 years there's a crash, then every 10 years there should be a crash, right? That's what people work out, but things don't happen to an exacting moment. They happen sort of plus minus around that time. Okay, NAS have room to 22,000, 22,150, then drop. We'll see. I love your optimism. Phew. You know, I love it when we have our little crystal ball out and we call it. You can't really call it. You know, what we're looking at here, look at it from a more basic perspective. Remember, the squiggly lines don't do anything. It's a bunch of traders in the market, just like you and me and everyone around. And we're all thinking along the similar lines. The NASDAQ's going to go and it's going to push for 22,000 and no, that's what we're all expecting. So all those traders are going to come into the market and they're going to push for it and they're going to do it. The thing is, you can't predict it. All you can look at is what you see here. And what you see here is this is bullish, not bearish. This is going up. This is a long trade. That's all you can see. Where's it going to land? Don't know. Nobody knows. We will only be able to determine. If we could determine that, everybody would win in the markets. Obviously, it would be like a free-for-all. And that's the point of trading. It would be a free-for-all if everybody knew where the markets were going to land. So I love your optimism. It's good. Yes, with that green candle, it's definitely long on the NAS 100, but no green candle on trading 212 on the 4-hour too. Is your platform open? Okay, what do we got here? It's the Tech 100, US 30, US 100. Okay, that's it. US 100. Let me have a look at it here. And guess what? This is a funded trader account. Funded trader market account. 21674. 21763. Huh. US 100 index. US 100 index. There's a difference in the price. And there's a difference in the movement. Isn't that interesting? Oh dear, what did I do now? Okay, I don't know what I did now. That looks a little bit tricky. 4-hour chart. Definitely on the 4-hour chart. Why do we have different levels here? It might be that it's not open on this instrument here. This market might be closed. Yeah, it says here market closed. Okay. Okay, that's what it is, guys. On this chart, it's showing the market is still closed. Different brokers. Sorry, guys. Okay, so this one is open. So, Kevin, you're quite right. The open one has got a few small dots on it. There you go. Okay. So that one is more, that's the correct one. Ah, strangely enough, that's the correct one. All right then, but here's the thing. Worst case scenario. Where's our worst case scenario? It comes down, takes that money there, and okay, comes down, takes that money there, and boom, off she goes. Okay. So that's your kind of worst case scenario. Otherwise, it goes straight up. Now, the trouble is this market hasn't opened yet. So when this market opens, you know, there's this liquidity sweep that somebody asked me to explain the other day, and I don't use it and I don't want to get into it and I don't want to confuse things. But what these markets tend to do is when they open, they tend to go in one direction, then shoot off in the other direction, and then sweep the market and take all the liquidity. So yeah, we don't know what it's going to do when it opens, so that'll be interesting. But yeah, if I look at the picture here, it's either going to go straight up or it's going to come down, take some money, and then go up. Okay, so that's a better picture of it because this one's open and this one's still closed. You got to be careful of that. You get caught out on that. This one's US 500's market open, so I don't know why this one's market closes. It's obviously just the broker. Okay. Cool. There you go. 21,703 and 212. 21,680 in Funded Trader Markets. Okay. I suppose that, you know, at the end of the day, I'm not going to hold them to it because if I buy this here or sell this here, I'm still going to make the same run of profit no matter what the price is. So I'm not going to concern myself with that. It's just that this one, the price is closed. That's probably why it's doing that. Okay, doesn't matter. Yeah, that's my view too. Just as you said there, that's where my 21.4 came from. Yeah, okay, so totally. If you look at that, there is a demand of money there. So your worst case scenario is it's going to come back down to that 21.4 and then go up. That either goes straight up or it comes and takes that money and goes up. Either way, it's bullish. You can't go short. You wait for it to take that money and go up, or you take the money and go up now. But yeah, it's a fair trade. Nothing wrong with that. Where's the Nikkei going? Is it going nice and short? No, I'm still on $0 there. I should actually get some more there and sort that trade out. Ooh. That coffee is cold now, but it lasted a long time. At least that. It can just show us the middle and go the other way. You think? I don't know. If it breaks through this, then it will go down. But then it will go all the way down here. That'll be a big, big fall. I think you need some kind of really big catalyst in the market to make it fall that far at the moment. You know, I think in December it's going to hold up. Actually, as we stand at the moment, I don't think it's going to fall too far. I think it is going to be quite a peaceful period, to be honest with you. I don't think we're going to see huge amounts of volatility over December. I see that the Dow Jones, is this one open? Not really showing me, are you? Okay, but this one is showing me that it's going to come down and take some money here and then shoot to the upside as well. So the Dow Jones is looking like a pretty good bullish trade at the moment as well, because it isn't a bull and it looks like it wants to go up. So Dow Jones doesn't look too bad. Let's just have a look at it on this side as well. Wall Street. Not sure where I put it actually. Let's have a look here. US 500. Boom, 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 boom. Where did I put it? 44,105 on that one. 44,148. Okay. So still closed. Okay. Interesting. This one's fallen over. Okay. Well, that looked like an interesting long trade coming up there. It has fallen down here. I'm just wondering if we're going to get that money here. There's the money there. Okay. Let me just draw that in so we can get a picture of it. Ooh, it's quite big on here, isn't it? Okay. There we go. And there it is, starting to bounce off here. So maybe, just maybe, get a long trade out of this one. Doesn't look too bad. Yeah, have a look at that. Okay. What else have we got? That's interesting. After, yeah, I've been noticing that lately there hasn't been as much movement. The movement will probably happen next week. There'll be some movement, most likely to the upside. You'll get some movement there. And what time frame is this on? H4? Yeah, it doesn't look too bad. Let's see, what's the problem with that? Why isn't it? Yeah. To me, that looks like a reasonably good trade to the long side. So, do you think the markets are going to go down or go up today? An interesting concept, isn't it? Okay. Always an interesting concept. Okay, so where are we going to put the stop loss? We're going to go long. The stop loss at 43,500. Yeah, 43,500. Let's add a trade in. Dum, 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 dum. Oh, gosh. So what that looks like. Oh, we can't do that. Not even that. Wonder if it'll allow me to take that. Oh, I'll tell you what I'm going to do. I'm going to take 0.05, 152. If it'll allow me to take that. I'll have a look at the order price now. Just see if we can get something on this funded trader account going. Target 45.5. Okay. Wonder if it'll allow me to take that trade. Shall we see? Haha. See if it allows us to take that. It did. It allowed us to take that trade. Okay. Sweet, man. All right. Cool. That's nice of you. Okay. Oh, let's see what happens there. Interesting that it allowed us to take that trade. Okay, so Dow Jones, long, right, okay. Gold and silver forecast, short Wall Street, 44,150 target, 43,950. We'll see, you've gone short on the Wall Street. I just went long on the Wall Street. Did you see why I just went long on the Wall Street? There's a demand of money here. You're looking at 43,950, which is about right where I'm taking it, actually. Somewhere in this level here. It's in the money, the 43,950. For me, it's a long-term thing, long, taking it up for it to sort of start going back in the northerly direction. Okay, so I'm long on Wall Street. Gold and silver forecast. Let me get my little crystal ball out. Hang on. Link. Crystal balls out. Forecast time. Right. Okay, let's have a look here. Gold. Long. Well, it's pretty straightforward, guys. You know, it broke out of this triangle to the upside. It broke through the money, broke through the resistance, boom, to the upside. It's come back to retest. So it's retesting, and it should, in all likelihood, go long and probably head all the way back up to the 28,000. Why am I going long on the Dow Jones? It's a Santa rally, man. I'm taking a gamble on the Santa rally, as well as the fact that it's hitting that demand of money. So I don't want to go short on that anymore. And the only thing I might go short on is the Nikkei. Maybe they don't believe in Santa. I don't know. Okay, right. Looks like you were right for gold. Well, yeah, gold's going to do that. It's kind of initially I wasn't sure whether it was going to break down, break up, don't touch it sort of thing. I said to you, if it breaks out of the triangle, it'll go. So it's broken out of the triangle and now it's going. It's retesting here. It's going to probably go along all the way up. And silver will do the same thing. Silver is exactly the same as gold. I'm not going to go over silver as well. Don't need to do that. They follow each other. I don't bother with silver because it's just less liquidity than gold, and you're trading with pretty much the same thing. This morning I did mention Brent long, and the reason I mentioned Brent long is because it's broken out of this support again. Look how strong the support is down here. It keeps on getting to the support and not getting through. Now I do know that the saying is the more times it hits the support, the more chance it's got of breaking through. I get that, but it's broken away, back up from the support again, moved to the upside, and then it's broken slightly through this trend resistance. Now that's been lower high, lower high, lower high, lower high, whoop, straight, broke up. Okay, so now we've got an interesting move. Coming back to retest. Now this retest, if we get a nice green bar coming out of here, then it's retested, and it's probably going to head to the upside because it's breaking out. If it comes back into the area, then we don't have the long trade. But this morning we were talking about the long trade here, but the long trade will only really occur if it kind of breaks out of this retest here. I don't think I took that trade. No, I took JAP 225 and US 30. Oh, I'm short on the JAP 225, aren't I? Okay, that's fine. No problem. So like with Brent oil, as I said, look out. It'll be the same as WTI and all the others. They pretty much follow each other, just different prices. But yeah, it's broken through that trend resistance, move up, come back, retest, and go up. Normally when it breaks out, you just wait for that little retest just to prove to you that it's going up, because otherwise it'll come back into the level and come back down again. My concern for Brent is if it does come down again back into the level and comes back down to test this support again, I got a nasty feeling that it could break the support because it's hit it so many times. So you've got to make sure and confirm that you get a strong retest out of here and a long trade that takes us out of this level at the end of the day. Currently in for gold, got in as soon as it broke up, $100 at the moment. Okay. All right, so you're doing okay on gold. That's great. And I'm seeing gold as it'll continue on to the long side. It's just retesting at the moment, and most likely it'll head on to the upside. Do be careful of these tops, but they do seem to be higher highs. They don't seem to be flat. So there's a high, two highs. There's a pincer. That was a pincer top which caused it to fall. Then we've got this high, which is higher than those highs. And then we've got a new high over there, which is higher than that high. So these are all higher highs moving in the upward direction. So if we take all of this rubbish out of here on the gold, just to make it a little bit more realistic, and you can see nicely that we've got these levels here that it's breaking through. So the next level is up here. And there's a nice level waiting for you up here at the 2750 level. So watch out for that supply level up there. It'll probably come into that level and then want to take some money and come back down again. So I don't think it'll go straight through there. It'll probably look to take that level and come back down a bit. You have the exact same line drawn in Brent. Must be learning something, Rob. Thanks. You know, Kevin, the funny thing about lines is I myself tend to, I'll take two different brokers, two different charting systems, and I'll draw a line and I'll find myself having a line in a different place. It's not easy to get them the same. So yeah, when you do get them the same, then you know you've kind of hit it on the nail in its right place. But yeah, no, that's a very that's just so basic. Lower highs coming in, and then break through, and then retest and let it go. See what happens. See if it works. Okay, Dixie is going up again, which is what's causing all the havoc, I suppose. And it's broken out of its level. So broke through the resistance, came back, retested, went up, came back down, came back through what was support and turned it into resistance again. Hang around here, back out to retest, come back out, back out. Now it's gone out again. Now we just want to see if it's going to break up. So it needs to come back, retest, and then it'll go up. If the Dixie goes up, then unfortunately the euro, which I thought was going to turn around, will continue on to the downside. And if it continues on to the downside, then it will go and look for parity. So euro US dollar is turning short now. Euro US dollar is not one of the easiest ones to trade, guys. You know, so don't beat yourself up if you get that one wrong. Which means the Great British Pound, US dollar, is also starting to turn around and look for lower levels. US dollar, Japanese yen is in the middle here. Higher, high, high, high. Looks like it wants to continue on up. My favorite US dollar, Canadian dollar at the moment, long again. I was hoping it would come down a little bit further so we could get the long down here. Might still do that. Let's see. Aussie dollar, US dollar is most certainly still short, and it's just not changing its stripes at the moment. It's continuing on to the downside. Great British Pound, Japanese yen looks like it wants to correct down a little bit and then continue on to the upside. Tim, good morning. Rob from Wisconsin, USA. Wow, welcome, Tim. Welcome. Good to see you. Good to see you here. It's lovely to have you guys here and chatting and talking about the markets in general, as usual. Always interesting. Okay, so the Nikkei is going short. NVIDIA, NVIDIA. I'm invested in NVIDIA. Big time. And I don't like seeing head and shoulders on it, but as I told you guys before, if I buy into a company, I keep it forever. So that's just one of those things. Look, it's broken through this resistance. It's holding it. It's staying above it. And I'm hoping that it will continue on to the upside on the long side. Okay, so I'm biased on NVIDIA because my bias on NVIDIA is I own it. So just a disclaimer there, I do own NVIDIA. So, well, not the whole company, I wish. Just some shares. But from my side, I wouldn't sell it even if it broke down. I'm okay with that. It's one of those things. I did add to it the other day at around 134. Somewhere down here. My opinion is it will continue on to the long side. Like I said, I don't like to see head and shoulders patterns in my charts, but it's there. And with investments, I don't panic. I just leave them. They're not geared instruments. They're just money that's invested there and it stays there forever. And when I look again, this will be up there anyway. So I never sell the investments because the minute you do that, you lose out. I just leave the money in there. So for me, it's long. I'm biased on it. I am biased on it. And it's just one of those things. I'm also, this Coke, I'm biased on that as well. I own that as well. And I'm biased. And it's just one of those things. The reason it's on my charts here is I was just looking at it because I want to add to it today. And it looks like it's opening higher, which doesn't really help me at the end of the day. The lower it opens, the better. But I just looked at this sort of it came all the way back down here. So I'm looking for a buy. It's sort of corrected. Looking for a good buy here. Because the price should be up here at the $74 level. Okay, so and add to that one as well. The Euro CAD, do I have it here? It's probably long, just like the US dollar CAD. It's not there. Okay, let's just put it on here and just have a look. I'll just take that and that's fine. Okay, there we go. Let's have a look. Euro CAD. Why do I have those lines there? I remove them. Probably from the old days. Okay, let's put that there. Put that on. Okay, let's see. What have we got? Euro CAD. This resistance is pretty far away. You got lots of room there. Support there that it's It's not going to go anywhere there. There's the main support down there. There's a support. I'm going to use that as support. Okay, Euro CAD. On the daily. On the daily, your Euro CAD, this is Euro CAD, yeah, is in a range. It's ranging. Let me just see, where did it come from? Oh, it's been ranging for a long time, but it did come from the bottom up into the range. So it was bullish when it came into the range. So most likely will resolve to the upside eventually, but it's ranging. So this is a ranging trade. Effectively, you can buy it at 146 and sell it at 150, 150. That's how it works. Let's take it to the 4 hours and see how we're looking here and see if we can find anything to cause us to buy in and sell at the moment. We do have a bit of a trend here. So it's in a bullish trend at the moment, very small bullish trend. And there's some money here at 150. For me, it is correcting down to this level. It'll take some money here around the 148.30. And you can go long all the way back up. That's going to go long. The Euro CAD is going long. This is a long trade. And okay, I'll draw some lines in for you so you can kind of see what I'm talking about. I'm just going to give you a sort of a bit of a line here. Okay, that's pretty much a bullish run. And if you take it up there, that's where it can go to. So I'm kind of looking at it as definitely a bullish run. And then you've got some money lying here as well. You can draw that in if you want. A bit of a demand of money. So yeah, Euro CAD, long. It's a long trade. It's fine. Tesla has been good all week. Putty didn't look at it. Yeah, Tesla did run hard. I don't have it on here. But it has run quite well. I think Tesla's going to do pretty well. And I believe the reason it's going to do pretty well is I saw a picture of Donald Trump and Elon Musk just now. Where is it? It's on here somewhere. Where they were having a little hug. They're such big buddies. And yeah, I think he's going to have an effect on that, just like he's had an effect on Bitcoin. So you can expect Tesla to do pretty well at the end of the day, because he's got all the support of the American president. And yeah, I think like Bitcoin as well, it's also got a lot of support of that sort of all the SEC guy they put in place and all the rest of it. So Bitcoin's pretty strong based on that as well. But as I said to you, this is all about people. I mean, it reached 100,000. People said it's reached 100,000. Let me sell my stock because it's reached 100,000. I mean, that's effectively what's happening at the end of the day. You know, people are sort of panicking, and yeah, it's not the squiggly lines that are moving the markets at the end of the day at all. Dow Jones, what are you doing? You're probably going against me, aren't you? Okay, we'll see what happens, because you know when the market opens, it's going to take that liquidity sweep, the one that I don't want to tell you about. They come down, take the money, and then go back up and move on. So, okay, let's see what happens. News items. Is there any news items out, guys? I don't know. Something must have moved it. I see the US 500 is moving a bit. How do you mean Elonia Trump? Yeah, I don't have anything to say about anyone's politics or presidency or whatever the case. I just look at how it affects the markets, and these guys do affect the markets one way or another. The only time I'll have a problem with any kind of president in the world or any kind of politician is if he causes human pain or even pain to the animals or something like that, then they can go to hell. But as long as they're professing to try and save their country, they'll all make mistakes. They're all human beings. Then I'm all for them. It's great by me. As long as they're trying to do good by their people, that's always good. Okay, so, human rights thing. Yeah. We all want to know that we're safe. We all want to live good lives, and we don't want to be persecuted by anyone at the end of the day. And we don't want any third world wars either. That's not going to help much either. So the comments that I got regarding the difference between the $5,000 and the $100,000 account, that's been answered. How do I manage my trades? Do I just leave them? I did answer that question. And I am going to show you guys how to do the moving average crossover in a video soon. And you guys can definitely watch the Fibonacci video soon as well. That's coming out for you. I've done the Fibonacci video, man. Fibonacci is a very, very, very cool product to use. And look at this. Okay. So this is the US dollar, South African rand. So I'm just going to throw a Fibonacci on here for you quickly. I don't know how many of you guys know how this works, but the Fibonacci levels are very much based on these are numbers in the universe. So this 0.618 and 0.5, that area there is what we call the golden area. And if a price comes down and gets into that golden area and it starts pushing back up and going out, there's a very good chance that this is going to go long from here. So the Fibonacci, the fantastic thing about the Fibonacci is if you look at that level and you look at where it's hitting, it tells you exactly, hey, listen, this might actually turn around and come out of here based on the fact that it's the 0.618 area. It's in the golden area. If it drops through that, then it failed. But if it goes up from this level, this is a really good level. This is actually a really good long trade if you think about it. And this is based on how the Fibonacci actually works. So if that green candle closes there, you can effectively take a long trade on the South African rand. I mean, the US dollar, South African rand. It's amazing how the Fib works. And go watch my video tomorrow, and it'll explain it in more detail as to how it's all come about and everything and how to trade it. But it's a fantastic little thing to use. I don't use it much anymore, but it's the one thing or the one indicator that I would put my stamp of approval on, because it really does help in many, many respects, and it does work in many, many cases. So yeah, if you're ever looking for an indicator that might give you some good information, this is the one that actually will. The 0.618 is effectively like 61.8% or whatever. It's like a 0 and a 1 here. And if you go a little bit further down, I don't know if you can see it, it goes over. So if you were short, you'd be looking to take profits in those areas and that sort of thing. So you always just take the fib from the last low to the last high, either way, short or long, and it just gives you an idea. And you're just basically looking for that price to come into the golden area, take it out, and go long again. That's all you're looking for at the end of the day. It's a fun thing to use. So, I mean, if you want to give it a go, for example, if you go now to the US 500 and you're thinking, ooh, what's going to happen with the US 500? It's a great thing to use. You can take the fib, take it from the basic low here, take it up to the top, and then say, oh, so if it comes down to, it could come down to 59.50. Golden area is all the way down here, and the price is all the way up there. And if you look at it, you can take a trade from 0.236, but it's risky. If it came to 382, you could take a level there. The nice thing about the fib as well is you can follow your stop loss up. You can move your stop loss up in levels. You don't have to use it on gut feel like you do with your support and resistance that we trade on a regular basis. So I'd throw you that. So I've brought a video out for you that. And then next week, I'm going to give you a video on moving average crossovers. And then I'll give you a video on MACD as well, moving average convergence divergence. But I hope I'm not going to confuse you guys too much, because I'm just doing it so that you understand what it's about. That's all. I'm not telling you to use it. Don't get excited. Don't go running off and using these systems to trade with, because apart from Fibonacci, the moving averages and the MACDs and all that are very much lagging indicators and that sort of thing. If you want to use Fib, you can, but then just understand that don't confuse yourself by using Fib and price action and support and resistance and supply and demand and then start working against yourself. Just keep it simple. Don't get overcomplicated, eh? Because that can give you a problem. Kevin, I've never used the Fibonacci, but I will check out your video now. The video is only coming out tomorrow, Kevin. Sorry, man. I've done doing the finishing touches. It'll be out tomorrow. You guys will see it. I think the members will see it in the morning. It'll be out. Okay. So I'm just going to finish it off and it'll come out. I haven't put it out yet. I've been working on it. And it's done. Just needs a few final touches and it's coming out. And then, yeah. But the Fibonacci, it's a sequence of numbers that you find. For example, they say the raspberry, if you open it up and you see the seeds in there, it actually follows that sequence as well, quite well. And there's a number of things like petals in plants and all that type of stuff. The Fibonacci sequence, it's an average of numbers, and it's amazing how it actually plays out. And very often I'll put a Fibonacci on a chart where I've got support and resistance, and you'll be shocked and stunned at how it gives confluence on a trade, you know, on a support or a resistance area or something to that effect. So you'll actually be quite surprised. Sorry about the dogs barking outside. Okay. Good. It's quite something, though, a South African billionaire telling Yanks they will have to endure temporary necessary hardship. I wonder, is he still South African, Elon? Is he still South African or is he now American? Because, I mean, even Trump's calling him one of their geniuses and whatnot. So I don't know if he's still South African or not. Either way, he's a billionaire. Yeah, so he's made a lot of money, which means he must be either very lucky or very clever, one of the two. Most of these guys are actually quite intelligent and quite clever. I mean, I actually laugh at people because they run around calling, for example, they start insulting Donald Trump and calling him an idiot, or Joe Biden, or any of these guys. You know, they've all got insults for them, and he's a fool, and he's this, and he's that, and the other. I mean, the people that are calling these people out, or calling these people names, or telling them they're stupid or whatever, couldn't even polish their shoes, man. I mean, they couldn't come close to what these people have achieved in life. I mean, these people have achieved so much, and here's this oak now insulting them who couldn't even wear their shoes. So, no, I actually laugh at that, to be honest with you. I'm sorry, but you know, these are guys that are not stupid, and they've achieved so much in life. And you've got, you know, if you're not on their level, then you have no right to insult them, to be quite honest. Where you can call people out is when they're doing bad things. Then, of course, you can call them out for that, but that's different. I feel like he has a little South African in him, but due to living there for long, he's changing. Yeah. Yeah, no, I don't know if he still holds a passport or anything. I'm just wondering, out of interest. Like, I believe he went to, from what I heard, he went to Boys High or something like that in Gauteng. Or was it one of the other fancy schools? But yeah, he comes from quite a well-to-do family, by the way. He didn't come from poverty. And he's done very well now. He has done very well. We should actually all be proud of him, not jealous of him. Hey, he's done extremely good. Wall Street is rejecting price at 44,150. Okay. I'm not going to worry too much about that. Market hasn't even really opened yet. Still a way to go, Vussy. And I suppose you're trading on the lower time frame or something, but I'm looking at an overall picture, so I'm not too concerned about what that. That is not an issue. Okay, so that brings me to the different types of trading. The approach that we use, it works on all the different types of trading. In other words, trading's risky, so it's a 50-50 game. So we approach it by taking the same risk on every trade so that we can lose the same amount on every trade and we can win more on our wins than we lose. It doesn't matter what type of trading you're doing. So I had the question the other day, will it work on futures? Will it work on 5-minute charts? So on. Of course, it's the psychology of trading. Of course it works on anything. It's not going to change. All that you're changing is the way the squiggly lines operate on your chart. That's all. You're not changing anything else. The system, the strategy will work on any type of trading. It doesn't matter. So, except for investing, let me point that out. Because on my investments, I use a totally different concept. Investments are a set and forget scenario. So if I buy into Nvidia or Coke or Apple, it's a set and forget. Or Tesla or whatever it is that I own. Amazon's done really well, eh? Sure, I'm really glad I own that one. But sorry guys, it's a set and forget. So I'll buy into the investment and then I never sell it. And then I'll add to that on a regular basis. So every single month I take money and I put it in the investment and I add it to one of the trades or one of the investments or whatever the case. So that's the one area where I'll even dollar cost average because I don't really care, because it's not gear trading, it's an investment. So whether the price has gone down or whether the price has gone up, I just look at which one looks like the best to invest some more money in, and then I put money in there. So for me this month, Coke looks like the best one to invest some more money in because it's had this nice correction. So for me, this looks like a good place to add some more dosh because the other ones are quite high. So I'm going to add some more dosh into that later on today when it opens. And that's it. That's as simple as investments get. So on investments, I don't use the strategy that we use because it's slightly different, obviously. The strategy that we use is for gear trading. I don't stop loss on shares, on investments. There's no stop loss on investments. That's buy it, hold it, and forever. And then what I do is if I see something in the news, let's say you own Tesla and Tesla looks like it's going to close down because something's happened with Elon, then I'll sell everything and buy one of the other companies or buy something else to replace it. So that's all I do with investments. I don't worry too much. How do I choose my companies that I buy in investments? I look at their price to earnings ratio. I look at their balance sheets. I look at their finances. I will look at the chart. I mean, obviously, I'll take a look at the chart and see how it looks, just a bit of a picture so I can get a good entry point. But no, further than that, I'm not even interested in technicals on investments. I look at the price to earnings. I look at the dividend yield. I look at where it's going, its financials and that sort of stuff, and that tells me it's a good company and its asset value against its price, etc. Earnings yield, all those sorts of things. You learn how to read a balance sheet and whatnot, and you'll be fine. And then that makes my decision. And also, look, on the South African companies, I actually walk into the shops and I see what's happening. I can see that this company looks like it's doing well. I can see that this company looks like it's looking to the future and there's some future earnings here. This looks like a good company to invest in. So, I mean, I invested in Spar in South Africa because I see this company doing well, improving their stores, opening everywhere, growing at a rapid rate. So my opinion is the way where they were the last retailer, they're very much number 2, if not number 3 in the country at the moment. Checkers is number 1. Unfortunately, they're running like hell. And then, Woolies was up there, but Woolies has really dropped back. And Pick n Pay is almost closing. If I owned Pick n Pay, I would close everything and I would buy Checkers or Spar in South Africa. So that's just an example. Another example is, for example, in the American shares. I mean, I'm not there. I can't see what's happening, but I do own Amazon because I can see what's happening there in a way, because I deal with them. They are in South Africa as well now, and I see them online and I see them doing their sales and what have you, and they look like a decent company, so I can see what's happening there. I'm not walking into the store, but it's close enough. You know what I mean? Companies that I can own in America, like I can own McDonald's because I've seen them all over the world. I mean, we know what they are. Coke, these are companies that I can own there. NVIDIA is just, we know it's the AI of the future. It's great. It's a good one. It's going. Companies like Apple, I can see what they're doing, what they're not doing. It's just, the way you invest in companies is just by looking at the reality of companies, not just at the squiggly lines and the charts. Understand what's going on in the background. It's not fundamentals as much as, well, it is fundamentals, but the fundamentals of trading is investing is just know what's going on. That's all. Different platform for buy investments. How does it work? Is that the same SPA we have in the UK? Kevin, it's very much the same SPA or the same group that owns your SPA in the UK. They started in South Africa, as far as I know. They were owned by Greek people, and it used to be our cafe in the old days. It was just a cafe, And now they've spread around the world. They've spread their wings, but they're doing so well in South Africa. I'm not sure how well they're doing in the UK. I'm pretty sure they're growing there as well. But you can see by what they've done with their stores, the service they're providing, and where they're going. I mean, they're really, really growing fast here. So, from that perspective, they look like a fantastic investment, and the investment is going up really, really well. It's normally a different platform for investments. So, for example, here in South Africa, you'll have platforms for trading, and then you've got an investment platform. It might be with the same company. I mean, for the South African guys, I've actually put links in the description. I don't get anything for it, but Easy Equities is the one that I've put there. But you can also trade with GT247, which owns Easy Equities or runs them. But you can't link the two together. So you can't take money from the one and put it in that one. So you've either got a trading account or you've got an investment account. It's different. So they keep it separate. So in our case, anyway, they keep it separate. But yeah, an investment account, you can get them with banks as well. You don't have to. I mean, because I used to have one directly on the Johannesburg Stock Exchange, an account. And the problem with that account was I couldn't just buy and sell my shares like sitting here at the computer and go click and sell it. I mean, I literally had to contact them and say, can you sell the share for me? And then they would take like a day to sell it and get me the best price that they could on the market or whatever the case. So, I mean, you would actually literally take losses like that. So, opening a brokerage account with the banks or with like the Easy Equities or those guys or whatever the case is actually better, because you can actually go onto a platform, click buy and sell just like you do with trading, and you get an instant sell or an instant buy. Well, not instant. Sometimes it has to take orders depending on how liquid the share is, but it's pretty instant. Let's put it that way. You don't have to wait a damn day. And then let them choose whatever price. You can put your market price in or whatever the case. So I let that JSE, direct JSE account go. It was totally a waste of time for me. It's been so long since I heard of Pick n Pay. Yeah, they're still here, but they've dropped off badly. But what I've seen in the stores is they're desperately trying to save it, because what actually happened was Sean Summers was the CEO, and he left many years ago, maybe 10 years ago or so. And some other guys came in, took it over, destroyed it. I mean, it was so bad. I mean, And you could see it and feel it when you went to the shop. You walked into the shop, it looked a bit bad, and you know, you go to the till and you get that teller that goes, "What do you want here? Why are you here? And, you know, are you actually buying here? You know, like bugger off." And you waited in long queues. You didn't feel like being there. It was a horrible place to go. And recently, they've taken Sean Summers back and put him back in as CEO. The trouble with it is he's in his 70s now. And I mean, the poor guy was retired, for heaven's sakes. And now he has to deal with all this technology that we have now, because all the technology is different. I mean, we got like 60 deliveries and motorbike deliveries and Uber deliveries. And, you know, everything happens online so fast, and the shops are all fancy and look good and what have you. So there's a lot of changes that has to be made. So I can see the stores are upping their game. They're changing their stores inside. They're closing a lot of the useless stores down, and they're trying to improve the service with the staff as well. The staff lately have been friendlier and more interested in their jobs. So there's been a lot of work I can see that's gone in to try and save the company, but they can't continue taking the losses that they've been taking on an annual basis. Some of those losses have been gargantuan. The last one was, I thought they were closing down, to be quite honest with you. So, I mean, the price dropped. I mean, last year it was at $60, and this year it dropped to $30, and I think it's dropping even lower. So, yeah, look, as far as that goes, pretty rough, eh? Pretty rough. So, yeah, just that's how it goes with some companies, and I'm hoping they survive. I really hope they survive, because I like having them around. As in a personal perspective, I like having the competition. I mean, just in the street down the road from me, I've got the Pick and Pay, the Woolworths, the Checkers, the Spar, Food Lovers Market, just to name 5. I've got more. It's crazy, and I like having them around, and I like the competition between them. And like I say, they do appear to be upping their game and improving their game, so it looks like they will most likely survive. Would I invest in them right now? Would I take that chance? Would I gamble on that? Not yet. I'm not comfortable yet to say, oh no, they're going to be around in 5 years' time. You know, I want to see what they're going to do. I'm looking at how their earnings are going to look, and if they get it right. If they start to improve their earnings, then I'll look at it. Okay. Spy have a lot of their shops on garage forecourts now. You know, that's a thing that's been happening in South Africa for a number of years now. Is all the stores, Woolworths, Pick and Pay, except Checkers, by the way, they don't do it. But Woolworths, Pick and Pay, Spar, all of them have been putting their shops into forecourts as well, or getting a deal with Engen or this one or that one, different garages, BP, etc. I think Pick and Pay goes with BP. I think Woolworths has got Engen. I think Engen's changing their name, or are they still the same? Not sure. But they've got the Pick and Pay, and then I'm not sure who Spar goes with, maybe Cecil. But they're getting into these forecourts and putting their shops in there. Because remember the old days, the garages had their own shops, or even in the old days they even had a parts shop. But then became the supermarket, and now, you know, they've moved on from that. So it looks a lot like it's all over the world now that these supermarkets get into the garage forecourts, and it works well for them. It works well for them. They went to Pretoria High, as far as I remember. Pretoria High, but isn't that Boys High, David? Pretoria High, isn't it? I'm not sure if it was Boys High, or I don't know. Anyway, modern technology like wireless mouses, if they work, haha. Yeah. I wonder, is Woolworths still considered the go-to place for premium products? Actually, yes, it is. Woolworths is, in South Africa, the go-to place for your premium products as far as food goes. But Spar is fast catching up, which is why I said Spar is really improving a lot. Why am I promoting them so much? We own shares, that's all. But at the end of the day, they are catching up to Woolies. And a lot of these other stores are actually catching up to Woolies as well. But when it comes down to the quality of the food, and let me tell you, I know this, the Woolworths is the best, right? If I buy food from Woolworths, I just know it tastes right. It tastes like the food that used to taste in the 70s. And you buy it at the other stores, it just doesn't have the same quality. I think Woolworths has definitely got something in their quality control that they just buy the right stuff every single time. Now, I like shopping at Woolworths, so I am biased, but that's because their food is, for me, the best. Everything that I buy there is good. If I go and buy a pie there, it's amazing. It's absolutely amazing. It tastes like it should. You know, if I go and buy meat there, it tastes like it should. You know, there's so many things that I will buy there, but there are things that I won't buy there. You know, like, for example, it's stupid to buy cool drinks there and things like that, because you can get them anywhere and it'll taste the same. But definitely foodstuffs, that their quality is definitely just that little bit above everyone else's quality. I've got to say, I don't know. They have their quality control right on the nose, right in the place. When you say Woolworths have their own farms, they probably have their preferred farms, and those farms may be owned by farmers, but they have to adhere to a certain quality standard to supply Woolworths. So it's almost like an export standard. Because I don't know if you know that a lot of the food that's exported is first class food, and the stuff that's kept in the country, a lot of it's third class, you know, almost, and we get fed all the rubbish. So I think that's where Woolworths changed the game slightly, and they're like, no. If you're going to supply us, then it's got to be first class, and we're getting the first class food from Woolies. And sometimes it costs a few pennies more, but you will be shocked that it doesn't. In many cases, the prices are, if not the same, even cheaper than some of the other stores on some of the foodstuffs. But you do have to watch what you're buying, because some of the stuff is far more expensive. I can't believe you still have Woolworths. It went down the tubes decades ago in the UK. Yes, but it's a different Woolworths there, Kevin. The Woolworths of old is not the Woolworths of new. The Woolworths that we have now is owned by Dave. Is it the David Jones brand or the Australian brand? Sorry, I'm going to be corrected, but it's not the same Woolworths that we knew in the 70s. The old Woolworths. The old Woolworths, even here in South Africa, that we had back in the old days, was a cheap store. It was like you went there to get cheap clothes and stuff like that, like a Pep stores almost. But whereas nowadays, for the last, I don't know how many years, Woolworths has been a premium brand, and it's a different owner. So even though it was called the same Woolworths, it's a different company completely to what you know that went down in the UK. That company in South Africa is also not here anymore, and Woolworths was taken over by a different group, which makes them a premium brand. Now, you've got that premium brand in the UK, and I can't remember what it's called, your premium brand store, but it's the same as Woolworths. If it comes to mind, I know you've got them in London, definitely. I can't remember their name. The name of your premium brand shopping store, Kevin. Just think of the name, and I'll tell you which one it is. That's the store. There's gold. Can it beat a good pie, Rob? No, definitely not. We used to have Woolworths here in Florida when I was a kid, but no more. Yeah, it's probably the cheaper one, or the Woolworths of old that was a cheap store, and the Woolworths that we have now is the premium store. Kevin, I don't know what your premium food store is at the moment, but that's Marks and Spencer's. That's the one. Marks and Spencer's. That's it. Marks and Spencer's is the same as Woolworths here. It's the same company. Okay. So the Woolworths that we have now is your Marks and Spencer's. So if that makes any sense to you, Kevin, that's what it is. Right. I just couldn't get the name. I'm getting old, man. As you all are. All old guys. Yeah, totally. Getting dementia here, man. Here's the gold, Wendy. Gold. It broke out. It's come back to retest. Don't worry. It's just retesting. I expect it'll probably go long from here. It's just retesting. It's not crashing, okay? Just a retest. So it's gone, broken through, coming back, retest, go through. If it breaks through, then obviously it's going short, and then it's going to sit in this range. But it does look like it wants to break through because I've seen these higher highs come up here on the gold. So I'd say gold will probably, in all likelihood, stay long and go up. Gosh, we had a long chat on investments now. That was quite a chat, eh? Yeah. So yeah, Kevin, that's exactly the packaging, even the packaging that you guys get in that store in Marks and Spencer is exactly the same as our Woolies. It's the same stuff, exactly the same stuff. So your Marks and Spencers is our Woolies. Okay. So it shows that I've been to the island before. I was born on the island in the north, in the cold, in the Scotland area. Yeah. Okay. So I like the warmth there. Better for me. Yeah. I actually grew up speaking Scottish, and people think it's the same as English, but unfortunately, not quite. Nobody could understand a word I was saying. And of course, my mother could speak Gaelic fluently. Yeah. Sainsbury's good, yeah. Sainsbury. Also fantastic. But I know the Marks and Spencer brand, and when you see the food that you're buying, even the packets are the same. Everything's the same. It's exactly that. That's exactly what it is. So yeah, that's I think the live show for today. I think we're gonna call it now. And you guys have got to get on, and I've got to get on, and everybody's got to get on, man, and do their thing. So I think it's been a nice session again, a good session. Don't worry, Wendy. I think gold will continue on to the long side. I really don't know what's going to happen with a US 30 or the Dow Jones or whatever. The NASDAQ, what's happening with the NASDAQ? I haven't looked at that. But the US 500, it looks like it's doing a sweep and then going back up. Yeah, can we all like the stream, please? Yeah, give the stream a like. I hope one day we'll get hundreds of viewers at any one time. That'll be nice. But I keep on doing the live for you guys because we are, even if there's only a few people here, at least we're a nice crowd and a nice group. And we're here and we're chatting and we're doing it. And I think most of the people enjoy the guys that do the 5-minute trading and the fancy stuff and the things bobbing up and down and all the rest of it. They're more interested in that than actually learning how to trade. So yeah, that's fine. That's fine by me. I'm glad we're here at least, and we're a good crowd. So one day it might become a lot bigger and more difficult for me to handle. So I do hope that I'll be able to handle it if it does that, but it's all good. Right, so we got 21 likes. Fantastic. That's what I want to see. Lots and lots and lots of likes. 22 likes, to be honest with you guys. I'm seeing 22 likes. So that's fantastic. Thank you, guys. At least I got 22 likes. And, okay, we've only got 25 viewers at the moment. Okay, yeah, maybe one day, like I say, we'll have lots more people interested in what I've got to say. Right, so, dang, you're right, it's going up. Okay, so I'm going to move on now. I'm going to head on out, and we will be back for our new live shows next week. Don't forget to come and watch the Fibonacci video that I'm putting out for tomorrow. That you guys will probably enjoy, and if you've got any questions on it, you can pose them to me on Tuesday, and then maybe over the weekend I'll try and make you guys a moving average crossover video. Let me see what I can do, so I can get that out on Monday for you, and then we can talk about that as well. And then on Tuesday you can throw the questions at me. We can chat about it. So thanks for joining me, guys, and I hope that helped you guys today. I hope it was worthwhile for you guys, and good luck with your trading till the end of the week. Try not to hold any indexes long over the weekend because you never know what could happen. Even though it's a Santa rally and it's Christmas, things could go pear-shaped at any moment. So if you've got short, that's okay. If you've got long, take it easy, guys. Take it easy. Rather close them out over the weekend. The Forex trades, either way, it's going to go up or down. Doesn't really matter. And the commodities, a bit like the indexes, never really know what's going to happen. Just remember, if the indexes go down, and because there's a problem in the world, that gold is a safe haven trade, so people will jump into gold for that. Guys, thanks for watching. Thanks for joining me. And I'll chat to you soon. Thanks so much for being here. I've really enjoyed it. And as usual,